All right, so let me just run on to the risks involved in trading. You know, when we do webinars, we always have to talk a little bit about the risks, especially when we publish these things on YouTube. But it's a good idea for you to know that as well. I always say without those risks, there is no opportunity. So the two really go hand in hand. But you want to be aware of the risk, and you always want to trade with money you can afford to risk, called risk capital. And the second equation of the risk control, of course, is how many shares of a stock or how many contracts of, for example, an option or even a futures trade that you make, how many shares of those or contracts do you actually buy or sell short? And so that can be answered, hold on one second. That can be answered very quickly by doing risk control or trade size calculations. And so you definitely want to know how to do that in order to control your risk on each and every trade. If you need help on that, I've got a couple of books, I'll show them to you in a minute, that will guide you in that direction. And then finally, always run anything we may suggest or any of my analysis. Don't forget, it's my analysis. So you might want to run those by your financial advisor or accountant or whoever manages your money to be sure those are suitable for you. And we don't know your personal situation, and of course they do. So that kind of takes care of the risk control. And of course, past performance doesn't guarantee future performance. And we deal in a realm of probabilities when we trade the markets. All right, a couple of books for you that may be of interest. I've got two of those books on money management. The book on the far left came out around 2008. And you know, all the concepts in these books are still valid. Just because time erodes doesn't mean the concepts erode, because they're time tested. And the markets really, for the most part, do not change from decade to decade. You may have more products to trade. You may have more exotic type of things you can get involved in. But the actual trading based on trends and breakouts and time decay option analysis, it all basically remains the same. But risk control is really important. And so the Trader's Money Management System, my book on the far left there, is really an excellent book for you to get a deep dive into risk control. So I highly do recommend that. And then I've got my Money Management for Traders book, second from the right, that I came out with last year. And the purpose of coming out with that book was basically to take the concepts in a trader's money management system and strip them down so you could have an easy format to apply risk control right away into your trading program without having to sort it out in the more comprehensive book. So it's kind of like a Cliff Notes of the more in-depth book. It's a great book. We've sold a ton of them, and I think it's helping people. At least I certainly hope it is, because if you're trading without risk control, all right, you're going to have a tough time with that, okay? And then I've got Elliott Wave Techniques Simplified, published by McGraw-Hill. That came out years ago as well. And again, the concepts in that book are great if you want to learn how to use the Elliott Wave. And what's the advantage of using it? I really call it the roadmap of the markets when I talk about Elliott Wave, and it is a form of technical analysis. And the Survival Guide for Traders is more of a reference book, but it basically talks about how to run your business, your trading business, right out of your home with today's technology. So that's a great book if you're thinking about trading right out of your house actively. And then my book on the far right, The Art of Trading, second edition, being published by Wiley Trading Books. That's coming out this year, 2024, so next year, in a week, so to speak. And I'm not done with it yet, but I'm close to being done with it. So probably sometime in the middle to latter half of 2024, that book should be out. It's going to be one of my best books ever. You know, I thought I was going to have it out last year, but I kept adding to it. And so there's a lot of material in that, but I'm going to wrap it up now. So that will be available in 2024. And you can get all our books, right on our website. All right, let's talk about economic announcements left for this week. I do like to cover this. So today being Wednesday, December 27th, this will be the last Wednesday of this year. And it's a pretty dull day, okay? I don't really see anything there that's going to affect anything. The Richmond Fed Manufacturing Index, woohoo, right? That's not going to do anything. Survey of business uncertainty, another woohoo, okay? All right, then we move on to Thursday, December 28th, which is tomorrow. We have international trade in goods, jobless claims. Those are kind of good to look at. Retail inventories, wholesale inventories, pending home sales index, EIA natural gas report, and the EIA petroleum status report. Fed balance sheet, no FOMC minutes at all this week, so you can rest easy on that. And then Friday, December 29th, we have Chicago PMI, Baker Hughes weekly rig count, and farm prices, and SIFMA early close. Okay, so there you have it. Getting ready for the New Year's on Monday. All right, so that's it. I don't see anything there that's going to cause a problem with us. All right, I always like to look at this. I thought I'd add this into the presentation today. This is the fear and greed index, and we're pegging at extreme fear right now at 77. All right, a week ago we were at 80, so it's come down a little bit. We'll see what it is again this week. I don't think it's going to be that high this week. But the bottom line is when you get into an area like extreme greed or extreme fear, you're usually near some form of top, all right? Maybe it's a short-term top, maybe it's a moderate top. The longer it stays in that greed area, extreme greed area, the more significant the top usually is. So we've been in there for quite some time. And even a month ago, we were in the greed, and that's no surprise. I mean, look at the markets, all right? They've been pretty strong since November. But I think that's kind of indicating that, heck, we may be due for some type of correction. And if you look at this chart, what's interesting about this chart here, hopefully you can see that. Let me just open that up a little bit higher. How's that, better? All right, so every time, this is the fear and greed, which I just showed you, but mapped over the last year. So this is the oscillating line that represents the fear and greed numbers from the previous screen. And if you can see, every time we get into this upper range, right around 70, okay, we usually see a change in pace. It starts to pull down a little bit. So I would imagine we're going to see that pretty soon. And if you look at the technicals, and we'll cover those in a minute on the charts, you can actually see that, you know, on the like 60-minute chart and the daily chart, we're kind of due for a pullback, all right? So it's not a matter of if, it's a matter probably of when. However, you can also see that sometimes you can stay in these I'll call them overbought areas. I don't really like that term, but, you know, you can stay in that area for quite some time before we see a decrease. So I don't think we've really seen it yet, obviously, but we may see it going into the first quarter of 2024. So I just kind of want to let you be aware of that as a possible issue somewhere out there, okay? So that's one. And then also two, we're going to be looking at charts using the trading tools that I created over the last 30 years of trading the financial markets. You know, we started traderscoach.com in actually 1998. And so the website has been active for 25 years, going on 26 years. And I traded way before that. I was with Morgan Stanley and Prudential Securities. And this is software basically that represents what I found important in the market when I made trading decisions. Okay. And, you know, we offered it to the general public. We actually got it coded in 2003. And it's been a big hit. So we have software that covers charts, and we have software that we use for scanners and risk control software. Again, I can't overemphasize how important risk control is because we do not win all the time. And so you have to cut those losing trades as quick as possible. All right, and that's going to take us to my current chart that I did on Sunday. Now, as Yummy subscribers, you get these charts for you on Sunday. So you're prepared for the upcoming week. If you're here on a free pass or anything, obviously you're not going to get that. But that's one of the benefits of subscribing. And, you know, I recommend that to everybody if they want to keep abreast of the market. Now, here's what's kind of interesting. If we remember going back into 2023, earlier this year, all right, we had this sideways motion on the chart. Really thought we had a wave 5 here, okay? I really thought that was the end and we were going in to a major move down, which would have been a major move down, a wave 4 on the weekly chart. Well, guess what? Markets being what they are, they surprised us again. And so here we going up here, probably into this wave 5 target zone. Now, the concern I have is a couple things. One is just because we've broken the 2022 high, which is this area back here, okay? Just because we've broken that, don't get too complacent, all right? It really delays the major correction, and that delay probably will be extended into part of 2024. But we're going to have to be careful towards the end of 2024 if we get into that wave 5 target zone. Now, I think, as I said, we're due for a pullback. All right. I don't think it's going to be a change in trend here. I don't think we're going to get that. Okay. I think at this particular point, if we look at some of my indicators down here, we still have a bullish green PTF on the daily chart, and we still have a bullish owl, quite significant. So any pullback, I think, may go to an inflection area. We could get down to 34,000. All right. And then we should recover and head back up and get into that target zone at some time during 2024. But because we've got extreme greed out there, we've got a run that's been nonstop since November, we're due for some profit taking, a breath in the market. And we're starting, we've had the Santa Claus rally started certainly earlier this year, but now that's done, okay, in terms of the pre-holiday run-up. And so what can happen here is, you have this week, all right, still maintaining pretty good, but a lot of people are redistributing their long-term capital gains and so forth before the end of the year. And you should do that too. You should definitely get with your accountant and talk to them about, the long-term capital gains. You can sell, if you have a capital gain loss, or a capital loss, I should say, you might want to take some gains on some of the ones to offset that, so you don't pay capital gains on the gains, and then rebuy them, okay? And that's usually what happens now going forward this time of year into the mid 2024 when people are buying back stock. I think you have to wait a couple days before you buy things back, but you get the idea. Talk to your accountant about it. But anyway, that's a smart move to make, so you can offset those losses with gains and have a zero tax bill, hopefully. All right, so this is kind of where I think we're heading. I think we're going to head up a little bit further, but I got to tell you, it's classic market. It starts sucking people in as we get up in here. People think, okay, the correction's over, but now we're right back where we were back in here when we thought we were going to have the big correction. So now we're back. If we get back into that wave 5 target zone, then you have to worry about a major sell-off in the market, because that's a significant high. So what my recommendation is, keep trading. If you're long on things like we are, keep trading, but expect a pullback. But if you're going to stay long on any of those pullbacks, then be sure to have a stop low enough that if this pullback turns into something worse, you get out and don't get caught with the downdraft, okay? But I don't think you have to worry about a major move yet to the downside. And if we look at the 60-minute chart here that I prepared on Sunday, I just indicated a generic profit-taking pullback zone, but that's only valid if we sold off this week. And I think probably we could go back up a little bit further before we sell off. So I'll have to redraw that profit-taking pullback zone, but you get the idea. Because this run-up started October 30th, so unbelievable move up. I mean, look how strong that is. Hasn't broken really the trend line until really recently. So don't be surprised if you get that pullback, all right? I would expect it at any time in this market. All right, now here is the weekly chart. This is the long-term situation. Every price bar here represents a full week, so this is considered a long-term chart. And then, of course, you got the monthly. We look at those too, and then quarterly charts and so forth. But in this situation here, what was very interesting is that, you can see, I put enough history on here to go back to about 2009. You can see that this little move back was nothing on this chart. Nothing, okay, which means it's not a long-term correction. So it means that we're still going up, and what we had thought was a major 3 here is no longer, and now we're in a wave 3 on this time frame, which means that when we get to the top here, this will be a wave 5 on that previous chart, because there are 5 waves inside the impulsive waves. So this minor 3 is from the daily, the minor 4 is from the daily, and then the 5th wave, wherever it ends in the target zone, will be the end of a major 3. And then we have to look out for a big correction at that point. So it's kind of interesting, all right? Notice here too, one of our indicators here, we're keeping a very close eye on this baby here. This is a PTF indicator, and we use that a lot. For those of you that trade with me, you know that I use that a lot. And I don't like to trade against it, but what it's telling us that is that as long as it stays red, and it was created red during the COVID low. So this indicator has a 75% probability of accuracy, where it says basically that during the next major correction, we will take out the COVID low. Okay, so that's what it's saying. We're not in a major correction right now, but it's saying when that occurs, it will take out the COVID low. Now, if for some reason we have so much energy come in that it turns it green, all right, then the correction will be a normal fib retracement correction after that. All right, but we'll keep you updated as long as you keep coming. Being a subscriber, keep coming here. Also, if you're in the More or Oracle services, you're not going to miss it. Okay, so you'll definitely check it out. But the long-term correction that we thought we were in as 2023 is a minor correction only. It was not the long-term correction. All right, I want to talk a little bit about housing for a minute, because I always like to cover this. I think it's a good idea to cover this in the brief. And this is basically a chart I pulled from RE Venture Consulting, so I did not generate this chart. All right, so I want a full disclaimer on that. But this is home prices versus income. All right, and they have some neat stuff over in that website there. But basically, what they've done is they plotted home prices versus income. And basically, here's the average right here for income, so to speak, or where it should be in relationship to home prices. And every time it gets extended, you have a bubble. And then it moves back to the norm. All right. And then, of course, here's where we are now. So if history is any teacher, so to speak, of what's going to happen in the future, you've got to respect this chart. And this chart is really calling for a situation where at some point we will move back to the average. So again, it's not a matter really, I think, of if, it's more of a matter of when. All right, and maybe it will continue to remain bubbled until the market breaks significantly. So just want to put this out there. If you're in the real estate field, or you're an investor and so forth, this may not be the best time to buy. Okay, regardless of, a lot of people think if interest rates come down, the housing market's going to soar. Maybe it will be temporarily, but maybe not really that much in the remainder of latter part of 2024. We'll have to see. But if you have a recession and people lose jobs at some point, then, because a lot of companies are laying people off, it's kind of a weird environment we're in now. Stock market's booming, and yet if you talk to a lot of the people on the ground in terms of how companies are doing, not so good, which is kind of interesting. Okay, so there you have it. So anyway, at this particular point, be careful a little bit. And my next chart here that I do want to show you is, of course, the one I like to always show, and that's the Case-Shiller Index versus the CPI. So on this chart here, you've got the red is the CPI, the Case-Shiller, so I'll put CS. And this black line down here is the CPI, Consumer Price Index, which represents the inflation factor. And again, kind of like in incomes, whenever the Case-Shiller average home prices for the U.S. get extremely far or elongated away from the CPI, you're in bubble territory. And this was back in 2008 where we were bubbled, and then it works its way down here. and then it recovered. You know, these things recover. The beautiful thing about markets correcting is that it allows the path then for recovery. Okay, so we need to have this type of pullback so we can have the next recovery cycle. And so far we haven't gotten that. And on this case here, you can see prices went up here. We had COVID, low interest rates again, 0, and it took off for a variety of reasons. Interest rates are 1, but also 2, everybody was leaving the cities and buying homes as well too. So as you can see here, again, if history is any teacher, all right, we're kind of out of whack, right? So if you look at that, we're due for a correction. How much of a correction? I'd say you got to look at about 40% at some point to get back into the norms of not only the Case-Shiller index versus the CPI, but also in terms of income, right? Okay, so I thought those were two pretty powerful charts. And you know, during bubbles, you always hear things are different this time. You know, how many people have heard that out there? It's always things are different. I remember during the 2000 dot-com bubble and the technology bubble we had back there, many of the analysts at some of the major companies that I worked for, especially the fundamental analysts, were pounding the table for people to buy technology. And they were doing that all the way up until the market bust. So, you know, basically explaining that because of the technology entering into society at such a fast pace that things were different this time. All right. Again, if history is any teacher, they're never different. Okay. That's what creates bubble. That kind of attitude, though, creates a bubble. So I just want everybody to be careful, okay, out there. I do think we're going to have a fairly decent first quarter in 2024. I do think, well, actually, let me rephrase that. I think you're going to have a pullback in the markets in the first quarter, and then it should continue and make more highs. And then we got to be careful because we should be getting close to that target zone. All right, any questions out there? All right, I'll go to the live markets now. All right, and this is the Dow Jones. And as you can see, you certainly have not had a break in this move up yet. So we're still going up. We got a green PTF here, all right, on the daily still. So we got more highs coming. But again, that could stay green even if you had a pullback. But things are looking pretty good. So if you're in long positions, all right, I see no need to dump them right now. If you're a short-term trader or a position trader and you're using these shorter-term time frames, then you can certainly set your stops based on those. If you're long-term, you need to have your stop low enough so you can survive any type of pullback. Let's just say if the market, for example, pulled back today and went down, you know, into a fib retracement zone, all right, you have to have your stop under here in order to stay in this for the next move up. So you may want to get out and then get back in. That's fine too, but have a plan. That's my point, okay? How you're going to do that, I'll leave that up to you guys. All right, so any questions on that? The other one I want to talk about today, you know, the NASDAQ, the S&P. What's interesting too, if you look at the S&P, okay, that's close to breaking its all-time high. I find it very interesting in this market that the Dow broke it, but the S&P didn't. Because usually it's the other way around. Usually the S&P leads the Dow, but not this time. Very strange kind of correlation. But I do think we're going to get a break into that upper zone. And notice we have a red long-term owl here for the next correction. But so there we have it, okay? So we're all moving up. NASDAQ is probably no different. We got a little ghost bar right there. But as you can see here, okay, on the NASDAQ, we haven't breached it here as well, okay? So we're still moving up on those. And the NASDAQ, I think, is you know, going to breach that high easily. There's so many NASDAQ stocks that are the real power hitters out there. All right, now that takes me to cryptos, okay? Let's talk a little bit about cryptos. I'm extremely bullish on cryptos. I have been since I initiated a buy on it around the $9 range, okay? And it's done extremely well. It too, like the overall markets, is due for a pullback. If it happened today, I drew in some fib retracements. This is probably where the profit taking would end, between $29 or $30 down to 25. If it goes higher before that happens, and it looks like it probably will, I'll have to redraw these, and this target range will be a little higher. So you got kind of a quandrum here. If you're in it, enjoy the ride, but you're going to have to decide if it pulls back, do you want to get out, all right, and then try to get back in, or do you want to use this pyramid, which is part of our software down here, to set stops on the long-term chart? And this should survive any pullback, and I do think we're going to get above the 60 at some point, okay? So I think long-term trade is great in this, but I can certainly understand wanting to take profits and then get back in, maybe take half profits. Again, I'll leave that up to you on how you want to swing trade that. All right, but crypto's definitely on a tear. I think even if the market sells off, I think, or goes higher, I think cryptos now are kind of making their stance, so to speak. Now, what's interesting about the crypto market, I want to show you something here. This is kind of a bizarre. We had one really outrageous price bar back during the summer in July. And if you had your stop, and if you were trailing your stops up on a short-term trade, you probably would have gotten hit on that. And look at that. I mean, that's unusual, but look what happens after that. It takes off. Now, I don't know if there was any manipulation going on in there, but that is pretty wild. Again, we recommended keeping that stop as low as possible. Never on a long-term trade, you never want to have it close at all. But, that's a heck of a price bar, almost like a fake out, to take those stops out and then have the market move up. So very interesting indeed. So you always got to be careful on your stops, right? All right, so that is one. Gold, there's so much news on gold now, and gold is on a tear, and we have a green PTF still, so no surprise that gold is moving up. It's kind of in its target zone here, okay, right now, but you still have a green PTF, and you just have a green one now on the short term, so you can continue to hold gold. Now, my target on this is around 220, and if we go back far enough here on the history, you can see a wave 3, a long wave 4, multi-year wave 4, all right, and this is wave 5, so we should get up into the 220 mark, all right, as a minimum here. So I think gold is pretty good at this point. We had the pullback, so hopefully you were able to get into that. And then silver is another one we've been watching. It was recommended by so many people years ago, especially influencers on YouTube. But the thing about it is, from a technical standpoint, it really was slow to prove itself. It had a big move up here and then has gone sideways for the entire year of 2023. And now it looks like it may be trying to pull up. It broke its pennant. We have green here now because we had some red here. And now we have green here. So it's kind of, I like it. What I'd like it to do is I'd like it to break this high here, all right, before I get too excited about it. So I think I will initiate a buy on this if we, let me just draw a better straight line, if we break out of this range here, okay? So I think we're close. If we see any follow through, I think silver will be a good buy. If you're in it already, it's just a matter of having your stop set correctly so the volatility like this doesn't stop you out, okay? So keep that in mind. All right, one more. Well, let's just see. Let's see what else I want to look at here. Anything else? Oh, let's take a look at, there's a couple other. Coinbase is another crypto that I think is good to look at. Very similar. This thing's on a tear as well. So very similar. But again, we expect this thing to continue to rocket ship up, only interrupted by profit-taking pullbacks at this point. And RIOT, okay, same thing. James, if you are here, I'm not sure you are, but I know you were a big crypto person, and hopefully you got back in after the sell-off. So again, we think this is going to make eventually pull up and go above $80. So this would be a long-term play in my eyes, okay? All right, so I'm kind of ran over a little bit. I don't think I'm going to get to too many people's stocks. I'll try to do one of each here, and then I'm going to have to run because I do have another webinar. So for Alexander, I'm going to do NIO. And if I don't get to your stocks today, don't forget, bring these to Stock Analysis Fridays, okay? Because this is exactly what we do for an hour or so on Fridays. So please join us. All right, this is looking really, really good, Alexander. Okay, I think we looked at this one before. But I'm even going to write this one down now because I'm really impressed with this one. So this is NIO. I would definitely recommend this, and I like it for a variety of reasons. We've got a major move down that was multi-year on the weekly chart. Now we're starting to bottom, and we can see this bottom starting to come off. We almost had a double bottom here and here. All right, so you've got green here, green here, green here, green here, almost green here, but no red here. All right, so if you want an early entry, this is good. You can go into it now, put your stop under this pyramid here, and my first target range would be about 16. So almost double your money, not quite, okay? But that's a go. And if you look at your risk to reward, if you go in here, here's your risk, and you've got at least 2 roughly to the upside. We have something called the risk to reward calculator, which will give you the exact numbers on that. All right. So that's definitely, thank you for sharing that because everybody could benefit from that. So that's a great one. All right. Let me go to LEPEP. Let me get yours here today. All right. So this is has been coming up for quite some time. The thing is, here's the way I would look at this one here for right now. All right, so I'm going to remove these lines here. Here is, if you're thinking about a long position or you're in it, all right, this is kind of causing me concern. This is a red PTF, which indicates that this move up here is profit taking only from those that have shorted the market. That's kind of what I would view that. Now, this is green over here. So this is indicating that the profit taking is not over. It should go a little higher. But this would not be one I would buy in anticipation of a bottom. If you're in this and have been in it for a long time, okay, then, you know, if you've enjoyed this run up and you're sitting on huge profits here, okay, then you may want to, at this time, put your stop under here, all right, and get out if it goes below that. That would be a long-term place that I would have a stop set. So those give you some options. Now, with that said, if you're in profits for quite some time on this, and you have a feeling we're going lower, then maybe in terms of tax purposes, and you got to talk to your accountant about this, because I'm not an accountant, and I'm not giving you legal or accounting advice here, so talk to them. But this may be a candidate for taking the capital gains on this if you've been a long-term investor on this to maybe offset some losses and then buy it back, okay, when it makes a new low, okay? In other words, it comes down here. Just food for thought, okay? You can do that check. All right, so that's it for today. Boy, good turnout, and thank you for some of those picks there. Great. Alexander and Ellie, please come to Stock Analysis Friday if you have any more, okay? Alexander, I know you do. All right, let's see what else we got here. I think that's it, okay? All right, Frank, good to see you too. And yeah, we'll have that book out there this year, okay? All right, so I think that's good. All right, so thank you everybody, okay? Hopefully the webcam I cut on today didn't cause a problem with the actual bandwidth, so to speak, but I think it worked okay. It certainly shouldn't, but you never know with these things. All right, so
Hello.
Yeah, hold on one second, Gene. So I'll see you guys next week, all right? Or should I say I'll see you next year, right? I always love saying that this time of year. All right, so don't forget client support here. Thank you so much for showing up. And Gene, I'll turn it back over to you.
Serving traders worldwide since 1998, TradersCoach.com provides educational services for traders and investors alike. We have developed trading software to help traders of every level improve their skills. Our site is dedicated to providing you with all the resources, software, and educational material you need to achieve your trading goals. It is because of our years of experience, attention to detail, and our exceptional customer service that TradersCoach.com is the right choice for you. Call us today.